Hi everyone, welcome to the last of our financial markets update for 2020. I'm Piers Bolger, the Chief Investment Officer here at Infinity Asset Management. And we thought it'd be worthwhile when we caught up at our last investment committee meeting across the team just to sort of share with you some of our thoughts as it relates to some of the central themes that we're seeing as we head into 2021, and then our investment positioning off the back of that, particularly through the first quarter of next year. And from our point of view, there's really 5 key themes that we're focusing on heading into the back end of the year, and obviously what we think are going to be driving, or certainly very pertinent as it relates to financial market performance through 2021. First of those is the development of the COVID-19 vaccine. We see this as an absolute game changer in the context of the ability for the global economy to reopen and the ability for basically a new stage as it relates to a post-COVID environment. If we look around the world now, there's upwards of roughly 16 firms that are looking to produce a vaccine. We've already had 3 come out to date, Pfizer, Moderna and AstraZeneca out of the UK. And domestically here, we've obviously had the University of Queensland and CSL vaccine. Unfortunately, on the back of the trials, that vaccine's been put on hold. So it does show that there's clearly some challenges around, obviously, the potential impact of the vaccine in regards to allergic reactions and the like. But more importantly, from our point of view, we think that clearly there's going to be a significant lag in the ability for the vaccine to be rolled out. And we do believe it's going to be a multi-year event. But in saying that, as I said, we do see it as a game changer for the ability of a stage reopening of the global economy. We think that's absolutely going to be critical in terms of financial market performance heading into 2021 and beyond. The second associated element that leads on from that is obviously the ability for a global economic recovery to take place. And when we think about that in the context of the rollout of the vaccine and the reopening of the global economy, the most important aspect that we link to that is the ability for the unemployment rate globally to decline to somewhere near pre-COVID levels. As we saw through the GFC and the associated time, it does take a significant amount of time for unemployment after it's reached a peak during a particular period for it to, as I said, to move lower. And we think that'll be no different in this case. But as we sit here today, we're seeing domestic unemployment roughly around about 7%, equally the same level in the US. So from our point of view, the ability for the vaccine to be rolled out around the world over a multi-month period, we think is going to be beneficial to lowering the unemployment rate that ultimately will start to feed through in terms of personal consumption and the ability for businesses to have the confidence to reinvest. And we think, again, that's only going to be positive for financial market performance as corporate earnings start to pick up on the back of more people having a job and then obviously looking to spend some of that additional disposable income. It also reduces the negative impact in terms of individual budget deficits. So we think ultimately it has a twofold benefit associated with that. The third element is around geopolitics. And, this has obviously been a particularly difficult period in terms of geopolitical relations, certainly over the last couple of years. We're going all the way back to 2018. And, when we start to see, as I said, the US and Chinese administrations really start to come to some sort of war as it related to trade. And from our point of view, when we think about the new US administration coming in, we do think that relationship with China is going to be particularly important, given that both countries are the 2 largest economies in the world. So it's going to be very important in the context of financial market stability and particularly around volatility of financial markets. So we think the China-US relationship is going to be critical for next year, certainly, as I said, with the new administration, but equally for the new US administration, how they engage with their allies around the world, particularly when we think about the rest of Asia, as well as in Europe, particularly with France, Germany, and the UK. And we think that this is going to have a big impact on the foreign policy framework associated with the US administration. And in our view, we can only see a more positive light as it relates to the commentary that we've certainly read and heard from the incoming US administration. We think that that's going to be a positive in terms of providing that stability and for countries to really begin to work together as they had been as I said, in the context of not only managing a lot of the crisis that is currently prevalent around the world, but as I said, equally how to manage COVID in a more uniform and structured manner. So we think the geopolitical tensions are going to be significant and are obviously going to have a big impact, as I said, on market volatility. Domestically, we've got our own challenges with China. We've seen obviously a significant impact as it relates to trade here domestically. So certainly we think it's important for the federal government to look to engage with China over the ensuing period, and certainly, as I said, reopening the ability for Australian trade into China. Again, our largest trading partner, we need to be able to have a constructive relationship, whilst at the same time, obviously, looking to ensure that it's a bipartisan and one based on an equal footing. The other element associated with that is clearly Australia has signed the Trade Pact with 17 other nations here in Asia as well as around the world, and we think that that does afford the opportunity for Australia to look to new markets, but very important in the context of the domestic economy that we do have a constructive and working relationship with China. So geopolitical events are going to continue to, as I said, have an impact on financial market performance and certainly, as I said, market volatility on that very short-term basis. The fourth one is around trade, and again, when we think about the performance of financial markets, certainly leading into the back end of last year, trade was a significant part of why financial market performance was so strong. We saw the challenges associated when we saw a breakdown in trade, particularly through 2018 with US-China trade wars and tensions associated with that. So trade and the reopening of trade, particularly as it relates to Europe, as well as through the rest of Asia, we think is going to be particularly important. It can only benefit not only cross-border trade in the context of goods and services, but more importantly, just allows freedom of passage as it relates to individuals. So the airline industry, hotel and tourism industries and the like. So that service side of the trade equation we think is going to be particularly important as it recovers from the impact of COVID. So the vaccine and the ability to see a reopening of the global economy is going to be really vital as trade becomes a key component part of the growth outlook going forward. And as I said, that's not only in broad goods and services, but equally in the service side of the economy as it relates to, as I said, air travel and the like. And the final key theme that we see for 2021 is the policy framework. And we're linking the policy framework to two key areas, both in terms of what we're seeing from a government, so in terms of fiscal policy, but equally what we're seeing in the monetary policy side of things from central banks. Now, I've seen around the world that governments have been very active in increasing the size of their public debt in order to provide that backstop for many, many people in their domestic economies to be able to survive during the lockdown phase. We think in that context that's only going to be maintained through the course of 2021, and we think that's really important in the ability of economies to, as I said, to maintain some level of growth, the ability for personal consumption to be maintained at some level as economies, as I said, work through the challenges of reopening in a post-COVID environment. So from that perspective, we think budget deficits are going to continue to remain elevated right around the world. Australia, no different in that context. From our perspective, I think that it still does afford the opportunity for governments to be very active in this space. We think it's the right thing to do. And when we think about it from an Australian point of view, our debt to GDP ratio at 40%, we think there's still significant headroom in that context here domestically. And then when we look at the efforts of central banks around the world, we've seen central banks continue to cut official cash rates to all-time lows. We're seeing also other means by which they're looking to provide liquidity and stability into financial markets. And again, we think that's really important in the context of particularly around liquidity in the context of providing that financial market stability. We only have to go back to March of this year when we saw the Federal Reserve, first and foremost, come in and provide that backstop by buying up corporate debt, by buying ETFs, and obviously looking to acquire additional treasuries in order to provide that liquidity and market support. And we think that's going to continue to be the case through 2021 and beyond. And I think if we actually look at the most recent commentary from central banks around the world, they're going to continue to grow their balance sheets, they're going to continue to provide that monetary support. And equally, when we look at what's happening from a central bank point of view, that fiscal support is going to clearly be maintained. So from our point of view, when we look at what's occurring for 2021, they are the 5 key areas that we're very much focused on in terms of our financial market positioning. The rollout of the vaccine, how we get that economic and growth recovery coming back, how we're dealing with the geopolitical environment, how important trade and the increasing of trade and the ongoing relationship across countries as trade is, and then ultimately how the policy front then is shaped by both governments and central banks around the world. As we sit here today, heading into Christmas, we certainly feel that a number of those are clearly some challenges. There's no doubt getting the vaccine rolled out is going to be a significant logistical challenge for 2021 and beyond. But we think we are now starting to see some more positive signs associated with 2021 compared to what we've been through, certainly through the first half of this year. And we think the performance of financial markets through the second half of this year, we believe, can be maintained as we're heading into the first half of next year. Accordingly, we've been positioning our portfolios with a slightly higher growth tilt, principally in terms of our equity exposure, but have been marrying that again with just some exposures as relates to more defensive asset classes, just to keep that balance across the board. But fundamentally, we think the growth outlook should continue to improve as we move forward from here. So with that, hopefully that gives you a good snapshot on some of our thoughts as we head into 2021. We clearly love to thank you for all your support through the course of this year. We know it's been an extremely challenging year, both at a personal as well as on the investment front. It has been great that financial markets have certainly recovered through the lows of March, and I think that that's a really important part around maintaining a strategy and being focused on that strategy as opposed to reacting to short-term market movements. But it clearly has been a year that I've never experienced in my professional career. It'll be interesting to see what comes in 2021, but as I said, we certainly seem to be a lot more positive as we see here today, as I said, with the ability of the vaccine to make a significant change to the outlook for the global economy. With that, as I said, just wish you all the very best for Christmas, and we look forward in touching base in the new year. Thanks, and bye for now.